With just over 1 week left in 2023, I want to share with you my dividend investing strategy for this upcoming year. So in this video, we'll be talking in depth about the current state of my portfolio, both the good and the bad, as well as what my game plan is for 2024. But before we get to that, guys, leave me a comment below and tell me about some of your investing resolutions for this upcoming year. I'd love to hear about some of your goals and what you have planned for your portfolio in the new year. Anyway, taking a look at my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download this spreadsheet in the description of the video. As it currently stands, my portfolio is valued at $59,614 and is currently generating $2,445 in annual dividend income. In both of these departments, I feel that I've made some really great strides compared to this time last year. At the end of last year, my value was $43,381, so we're up about $16K year over year, and my annual dividend income was just over $2,000, so we've added a few $100 there. And it's worth noting that I have about $2,500 of cash sitting on the sidelines ready to go to work, so my annual dividend income would be higher if this was all invested, and I'm sure in 2024 I'll have this deployed back into the portfolio. Anyway, in terms of performance, just to recap 2022, last year my portfolio was just about break even. I was down 0.12%, and I did end up outperforming the three major indices, which saw a much greater drawdown than my portfolio. However, 2023 tells a much different story. I've seen a much nicer gain this year compared to last year. I'm up about 11% in my main taxable brokerage account, and my Roth IRA on M1 Finance also saw some pretty solid performance, up 14.2%. But still, both of these accounts, and therefore my portfolio as a whole, did unfortunately underperform the rest of the market this year. According to Schwab, the S&P was up 26.2% in 2023, the Dow saw a gain of near 16%, and the NASDAQ had a really solid year, guys, up 42.25%. That's really unbelievable, but all in all, definitely trumps the performance of my portfolio. However, if we zoom out across a longer period of time, taking things all the way back to October 15th, 2020, which is when I uploaded my very first video here on the channel, my performance from then to now has been pretty solid. Overall, my portfolio is up about 62.5%, which, as you can see, is a considerably greater return than the three major indices here. And if we show the annualized returns across these last 3 years, my portfolio has gained about 16.5% per year compared to the S&P's 12%, the Dow's 11.3%, and the NASDAQ's 7.7%. Now, having said that, will I continue to beat the market as time goes on? I have no idea. And truth be told, I don't feel like I've been in the market long enough to get a sense for the long-term performance of this portfolio, because 3 years is really not an extensive period of time. However, I've definitely seen some good performance with a few of my holdings, especially this year. Looking at my best performers over here on Seeking Alpha, Williams-Sonoma by far took the cake. Year to date, it was up over 75%, and my position has seen a lot of those year-to-date gains. I started buying Williams-Sonoma back in June, and so right now in my portfolio, Williams-Sonoma is up 51.4%. Not too shabby. And then my second best performer was Apple, who was up 50% in 2023. And I've held Apple for about a year, so I've seen all these gains over the last year. I'm up 50.5%. And believe it or not, Blue Owl Capital Corporation was my third best performer this year. In 2023, it was up almost 33%. And so my own position's up 11.6%, but on a total return basis, those returns are almost triple. I'm up 31.6%. And then I had some others do really well. Snap-on was up over 24%, really crushed it this year. Main Street was up 18%, Lowe's up 11.4%, EPD up 8%, and KRC squeezed out a pretty nice gain when it was all said and done, about 6%. But look at this performance just in the last month, guys. It was up 32.33%. But even despite those solid gains, guys, I still had a few companies that really didn't perform that well. Like WP Carey here, who was down almost 18% when it's all said and done. Chevron also didn't have the best year. They were down 16.3%, along with J&J, who was down 13.25%. And I have been loading up on this company, as we'll see in just a moment. But anyway, Altria Group also was down 12%, AT&T down 11%, Realty Income down 10.6%, and then some others that also saw some pretty decent losses. Either way, I feel like I made some great strides in the portfolio this year, and I'm pretty happy with the direction things are heading. But anyway, switching gears and taking a look at my biggest buys throughout the year, like I said a moment ago, I went heavy into Johnson & Johnson. This was the biggest recipient of my contributions this year. I invested about $2,500 into J&J when it was all said and done, but Williams-Sonoma was not too far behind that. Invested about $2,400 into that company, and like I said, I started that back in June. That's the newest position to my portfolio, but I also did a lot of damage on SCHD. Almost $2,300 invested into the holy grail of dividend ETFs, along with about $1,900 invested in Realty Income, and then about $1,400 invested in VU. And after all of these transactions, this is what the current top 5 in my portfolio is looking like right now over here on GetQuinn. GetQuinn, which is a new portfolio tracking platform I started using about a month ago, and I've got to say, guys, I absolutely love it. And if you're looking for something more than just a spreadsheet to track your portfolio, this is definitely worth checking out. GetQuinn has one of the best looking interfaces I've ever seen, and it's a great tool for keeping track of all your portfolios, all of your holdings, and all of your dividend payments in one place. And you can check it out for free. There is a link to GetQuinn in the description of the video, and if you end up making an account, shoot me a follow on there. My username is just Ryne, so it'll be pretty easy to find. Anyway, back to my top 5. As you guys can see, after all of that buying, Johnson & Johnson is now my largest position by quite a bit too. I have over $5,000 invested in this bad boy officially, and that's the only position where that's the case. But anyway, Procter & Gamble is my second largest position there. Realty Income's in third place. We have SCHD in fourth place. It has now officially made its way into my top 5, and I'm dollar cost averaging into this fund every single week. And I actually just upped my weekly contributions to hit it even harder. So pretty soon, like I would imagine in the next probably 2 or 3 months, SCHD will become my largest overall position. And then we've got Starbucks, guys, right there in the number 5 spot. Still one of my core positions, and I might have to start buying a little more Starbucks again soon. It's been a while. It's starting to get decently close to my average cost. Now, like I said earlier, overall, I feel really good about this year. The portfolio is starting to come together, and more than anything, I'm just enjoying the ride. These last few years have just been awesome, and it's been so much fun learning and trying to get better at all this investing stuff. As I say all the time, I started doing this with absolutely no experience whatsoever. So over these last few years, I've really pushed myself to learn as much as I can about investing and researching companies. And in doing so, reading has been absolutely essential. I actually think reading is imperative if you want to become a better investor. And I believe reading more is something that everyone should have on their list of New Year's resolutions. But anyway, I want to share with you a few of my favorite investing books that I read this year, starting with this one right here. This is The Snowball by Alice Schroeder. This is the biography, the definitive biography on the man himself, Warren Buffett. I can't recommend this book enough. It's quite the behemoth, actually. It's about 700 pages, but I'll tell you guys what, I cranked through this book in probably 2 or 3 weeks. I wish it was longer. It's a really good book, and I recommend it to every investor. Anyway, this next book is another one that I think everyone should read. This is The Psychology of Money by Morgan Housel. I'm sure a lot of you guys have already read it. In case you haven't, in the book, the author breaks down all of these different strange ways that people think about money, which is obviously a very interesting and important topic. It's something that we never really learn about growing up. We don't really learn about how to manage money in school. Anyway, I think this book does a really great job of making sense of it all and can have a really positive impact in the way that you behave and in the way that you think about your finances. Next up, this third book is The Education of a Value Investor by Guy Spier. I think you guys will really enjoy this book, and I also think you'll really fly through it. It's a pretty easy read, but there are a ton of great investing insights from the man himself. Guy Spier is a legendary investor, and in the book, he basically shares his entire investment journey, his entire career from the start up until now, and shares his wins and some of his losses. And so I think it'll really help you as an investor. But anyway, those are a few books that I really enjoyed reading this year, and I think you guys will really enjoy reading them as well. I'll link all of them in the description of the video. And in 2024, I want to read even more. That's one of my biggest goals for the new year because I really do enjoy it so much, and you really do learn a lot. And with that, another one of my big goals for 2024 is to finally max out my Roth IRA. I didn't do it the first couple of years. I'm going for it in this upcoming year. And like I said a few minutes ago, I just upped my weekly contribution, so I should have no trouble doing that in the next year. And then another one of my goals is to reach $3,000 in projected annual income. Now, as we saw earlier, I'm up over $2,400, so that's less than $600 added in the new year. I think that's totally doable. And then one of my biggest goals for 2024 is to really dial in my stock research process. I've told you guys a little bit about this dividend database thing that I've been working on, and this is essentially like my second brain for investing. All of my stock research is going into this database, and this is what I'm using to develop an all-encompassing start to finish process for researching stocks. I'm actually using it right now to go through Visa, which has been a lot of fun. Visa is one of my top picks right now. I'm really stoked about this company. And then after I get through Visa, I'm going to use it to do a deep dive on Rollins, which is another one of my top picks. I've been eyeing this company for over a year now. Between that and Visa, those are the two big ones that I have on my radar right now. And if you want to hear about a handful of other stocks that I'm most definitely staying away from and suggest you do the same, then check out this next video right over here. In this one, you'll learn about 3 dividend stocks that many investors like to buy, but truth be told, they're terrible investments and you should avoid them at all costs. So click right over here to find out what they are, and I'll see you in the next one.